All right, can you guys hear me? All right, can you guys hear me? Okay, I'm gonna start in just a couple of minutes. What's up, DJ Sutton? Okay, I'm starting in just a couple. What's up, Patty? Mackenzie, how's it going? Can't believe you're a triplet. Not exactly the news I was expecting to hear today. All right. What's up, Eli? Okay, we're going to start in 2 minutes. 8:08, we're going to start at 8:10. Give some people a couple more minutes to join. What a day. Thanks, DJ. All right, just about ready. All right, so let's take a look at the day trader chart first, and then we'll jump into the macro sort of things. So, here's where the breakdown happened at about 28 bucks. Price sold below the hourly trigger, and the hourly trigger is basically, on the micro trend, for like a couple of days at a time, usually tells you which way price is going to go. So once price breaks below the hourly trigger, in general, when we're trading other stocks, not GME, that's when we go short. Price breaks below, that's when we go long. Calls, options, stocks, whatever it is. So we can see GME started to break down. So I wanted to get into this and show you what this looked like. You could also see rejection here of the hourly trigger, rejection here, 2 rejections here, 3rd rejection, and then this final low. So let's look at the hourly velocity during each and every one of these moves down. So first, price started to sell. We made a low of about 26.17 or 26.07. And the velocity at that point was negative 0.08. So when price made this new low and velocity made a new low as well, right, negative 0.09, so velocity is getting more extreme to the downside, Anemoi is kind of telling us that we have to expect more downside. Because if buyers had any sort of say in the price, then the velocity, instead of going from negative 0.85 to negative 0.091, the velocity, instead of getting worse, it would get better. From the fact that it's getting worse with the new low, tells us we have to expect more lows coming. And then we get this new low right here at 25.55, and the hourly velocity, negative 0.098. So here's your first low. And second low, velocity is getting worse. Third low, velocity is getting worse. If with each new low, hourly velocity is printing more extreme to the downside, that's Anemoi telling us we have to expect more downside. And then price makes a fourth low, 24.88. And if we look at the velocity, negative 1.2. So let me explain something about GME. Negative 1 or positive 1 is it basically tells you that this move is going to be a strong move. So when you have positive velocity, this is 0.07. When you have positive velocity of greater than 0.1 or negative 0.1, it tells you that we're gonna trend strongly in this direction. So again, with each new low here, 1, 2, 3, 4, velocity is getting more extreme to the downside. That tells us that we have to look out for more downside. Price comes up, we're expecting rejections of the hourly trigger because of the negative hourly velo. And then as price makes this low, right, this is your fifth low, 1, 2, 3, 4, 5. On the fifth low, hourly velocity is still getting worse. And so we have to expect that price is going to make even another low. Now, if we were trading any other stock, for example, we would be short puts right here. And with each new low, because velocity is printing a new low, we would not have gotten out of our put position, and we would have been short all the way down here. We would have caught greater than a 10% move to the downside in only 6 days. But let's look at what happens when price makes this low right here. You can see that on your sixth low, so, whoops, hold on. So again, 1, 2, 3, velocity is getting worse, 4, velocity is getting worse, 5, velocity is getting worse, 6, velocity is getting worse. But here's where the magic happens. On this low of about 22.45, the hourly velocity was negative 223. And then when price came down and made a new low at 22, the negative velocity was only negative 2230 as opposed to negative 2237. So if price was going to make another low, like we just discussed back here, if price was going to make a new low, then the hourly velocity is going to print a new low as well. The fact that the hourly velocity did not print a new low told us that we are in fact bullish, and that's why, we were able to alert calls, right? GME 25C 1111, because since velocity did not make a new low, even though price made a new low, then we can expect that the reversal to begin and price not to have a new low. So, and you can see how well that worked. So Balake says the velocity on the fourth low looks better to me. What am I missing? Okay, so let's look at this one more time. All right, here's your first low. Negative 0.85 is the velocity. Here's your second low, negative 0.91. Here's your third low, negative 0.88. Your fourth low, the velocity was better, but it printed at the end of the hour, negative 1.2. Because this was the first hour of the day. See how it says 9:30? So Eastern time is the first hour of the day, so velocity doesn't print till the end of the hour. This is your fourth low. Then here's your fifth low, and each of these lows, velocity is getting worse and worse. But when we come down here and we make this final low, velocity got better from the price of 22.45 to 22.05. If we were indeed bearish and were headed down to lower lows, velocity would have agreed. But velocity not making a lower low is a bullish sign. And you could see the reaction that price made towards the hourly trigger as soon as this happened. But we can't only rely on the hourly velocity, because the hourly velocity doesn't tell the whole story. We have to make sure that the lower time frame velocities, the 1 minute and the 5 minute, agree as well. So let's see if they do agree. Let's take a look at the 1 minute trigger. So again, when you have hourly divergences, price reverses all the way back to the hourly trigger. When you have 1 minute divergences, price reverses to the 1 minute trigger. So let's take a look at today's price action, right? So we're below the 1 minute trigger, we're selling down. Now on the same thing that we just showed with the hourly, it's on a bigger scale, but it works the same way as the 1 minute. So look at this right here. This low, the 1 minute velocity is negative 0.24. This low, negative 0.25. This low, negative 0.45. So again, it's telling us that price is going to keep selling because with each new low, velocity is getting worse. This low, negative 0.47. This low, negative 0.7. Next low, negative 1.0. With each new low that price is making, the 1 minute velocity is making a new low with price. So over here, you knew that we were going to make another low. Over here, you knew that we were going to make another low. Over here, you knew we were going to make another low. Over here, you knew we were going to make another low. Over here, you knew we were going to make a low. We were going to make another low. But then over here, this is your first bullish divergence. 3 bullish divergences, and price will revert back to the 1 minute trigger. And it will also show a big sign that sellers are losing momentum. And so you have your first bullish divergence right here at 22.45, because your most extreme print came when price was at 22.65. So bullish divergence, bullish divergence, because on this low, and this low, velocity did not print a more extreme low. And as soon as you had your third bullish divergence, we had a reversal to the 1 minute trigger. Now, because hourly velocity is nasty, right? -2.2 is a really, really strong hourly print. Really strong negative hourly print. So we have to expect rejections at the triggers. But once we had this, what this move did for us, all right, even though it only brought price up to the 1 minute trigger, it did help us turn the hourly velocity. Because since price was able to show some power just from the three divergences on the 1 minute, it doesn't necessarily need to bring the price up for it to help out GME. What it could do is could turn the hourly velocity, and as you can see, once we had 3 bullish divergences in the 1 minute, we started turning the velocity. Instead of getting increasingly negative, we started to turn the hourly velocity, all because of 3 divergences on the 1 minute. Now if we look at the 5 minute, we had something very similar. So, you know, first of all, you can just take a look at here. So, you know, you're selling down, here's your 5 minute print. And then you sell down again, stronger 5 minute print. So we have to expect more downside. We sell down again, stronger 5 minute print. But the price here was 22.47, and your strongest 5 minute print was -12. Now, when price makes this new low, -22.29, that's your first bullish divergence, because if we take a look at, if we remove everything else, you'll see that here is your most extreme print, and on this new low, velocity did not make a new low. So 1 bullish divergence. Here you have 2 bullish divergences. Now, when the 2 bullish divergences on the 5 minute, but we already had 3 on the 1 minute, right? Because here, and then 1, 2, 3. So the 3 divergences on the 1 minute velocity brought price up here, which helped us to get which softened the selling pressure and allowed us to make our third bullish divergence when we came down here. So all velocities and all time frames work together as one to show us where price wants to go. Now, here's what I want to explain about Anemoi. It's not once you get your third bullish divergence, which was here, price makes a reversal, right? Here's your most extreme print, 1 new low, 2 new low, 3 new low. Velocity did not agree on these 3 lows, so we had a reversal. The way we play this, the way our group, you know, plays calls or plays puts when we have 3 divergences, is we wait after 2, right? So here's your most extreme print, 1, 2. Now in our minds, we are waiting for a third low, meaning anything under 22.05, we're gonna furiously buy, because we know that when price makes the third bullish divergence, when price makes a new low, we know it's gonna diverge, because there's no way the new low's selling pressure is gonna match this kind of velocity, which was a 24 to 22, which was a $2 move down in you know, an hour. So we know we're not gonna match that. So in our minds, what we're doing is we're already planning ahead. We're ready to buy calls. We're ready to buy shares. And we know we're going to get the low, because on every single stock in the market, back tested over 20 years, a stock doesn't make a new low after 3 bullish divergences. It reverses back to the 5 minute trigger. Always. Everywhere, on every time frame, whether it's 1 minute velocity reverses back to the 1 minute trigger, whether it's hourly velocity and reverses back to the hourly trigger, it always works. And so our method is we say, okay, I know I have 1 bullish divergence and I know I have 2 bullish divergence. So I'm going to wait. I'm going to be patient. I'm going to be patient. I'm going to be patient. As soon as price starts cracking new lows, I'm buying calls. And if you bought at the low today, 22.01, you know, if selling into the end of the day, that's a pretty profit. Or if you don't play calls, it still gets you a nice little, still helps you get the low on this move, whether you're swinging shares or you're holding shares. But hopefully that that was helpful to everybody. If you have any questions on this, please ask them now in the comments, and then I'm going to go over the macro setup. So any questions on divergence, on what I just explained, just please drop them in the comments now. We'll give you guys like 2 minutes, and then as soon as we're done with that, we're going to move on to the macro setup. Did anybody understand that? Am I live? Can anyone even hear me? Anyone? Mackenzie says it makes sense. Patty says excellent. Okay. All right. So I'll just give one more minute for GQ Ganny, not smart enough to ask questions. Listen, man, I posted a lot of tutorials on my channel that break it down really simple. If you want to learn more, you could take a look at those. Okay, so let's move on to the macro setup. This is where it gets interesting. Okay, so I'm going to zoom in over here. All right. So when price was over here on Friday, when price closed on Friday at where was it? Right, when price closed on Friday, we were at 26.51. And the hourly trigger was coming down towards the daily trigger. So now I've spoken about hourly trigger, daily trigger airplanes many times. If any of you guys are new to the channel or new to Anemoi, I will give a very quick demonstration of what an hourly trigger, daily trigger airplane looks like. So if we take a look at AMC, for example, an hourly trigger, daily trigger airplane is when the hourly trigger, which is the purple line, comes down to the daily trigger, which is the blue line, and then curls off it and rises off it, and that leads to powerful upside spikes. So you can see this one in AMC, price went from $7 to $13 in the span of 10 days on an airplane. And then if we look at a couple more, like for example SoFi, here was another airplane setup where the hourly trigger comes down to the daily trigger, bounces off, and price explodes to the upside. Now, when the hourly trigger comes down to the daily trigger, every single time in every single stock in the market, price will almost always explode to the upside because it's predetermined. Anemoi is just showing us where the algos are. And so when the algos get tight like this, and then the hourly trigger curls up, that means price is about to explode to the upside. Now, just show one more in GME itself, and then we'll get back to where we are currently. This would be another example of an hourly trigger, daily trigger airplane. So the hourly trigger comes down to the daily trigger, touches off it, starts rising above it, and price explodes to the upside. So now that you know what an hourly trigger, daily trigger is, let's zoom into where we were now. So when price closed Friday, 26.51, if we would have moved above the hourly trigger and the daily trigger, then the hourly trigger would have curled off the daily trigger, and price would have exploded to the upside. Now, what's very important about that is that the weekly trigger and the monthly trigger were right above at 29.86 and 30.17. When price breaks through any trigger, it's an acceleration level. The strongest acceleration levels are the weekly trigger and the monthly trigger, and the weakest acceleration levels are the 1 minute trigger and the 5 minute trigger. You could see price break below the daily trigger here and get crushed to the downside. You could see price break above the daily trigger here and get crushed to the upside. Another thing is, the stronger the velocity is, the stronger the triggers will act as support or resistance. So if we look at the monthly velocity, during the month of October, we had nasty negative monthly velocity, negative 3.7. And so because we hit the monthly trigger with nasty negative monthly velocity, we got whacked to the downside. This is very normal. If you hit a trigger with negative velocity, then you have to expect to get whacked to the downside. Like for example, if we want to look at FOMC this week, we could see a pretty neat example in the Qs. I'll show you what that looks like in a second. All right, so take a look at this. This was the Qs going into FOMC, right? So here was the 2 o'clock that they announced the rate hikes. Price exploded to the upside. But notice that the hourly velocity was extremely negative, negative 2.7. We spoke about that being a really strong number. And so when price attacked the trigger with negative velocity, you have to expect a strong rejection to the downside. And so puts were the obvious play during FOMC after this moved to the upside. If the velocity wasn't so negative, then price could have broken above. But with strong negative velocity, Anemoi is telling us to expect a rejection at the trigger, and price should get whacked. So same thing with GME, except on the monthly level, which is the strongest. So price moved up into the monthly trigger when monthly velocity was negative 3.7, which is really nasty, and price got whacked. So again, hourly trigger crossing the daily trigger is not that great for us, but what we need to do is we can assume, unless there's a FOMC, unless there's a CPI print that utterly collapses the market, we can assume that we put in a significant bottom today. If we look at the hourly velocity, you can see it here. Although it wasn't much, it was still a divergence. Although it was teeny, it was still a divergence. So the hourly velocity was negative 2237. The hourly velocity was negative 2230. So because we have hourly velocity divergence, 1 minute and 5 minute bullish divergence, like we showed earlier on the day trader chart, we have to assume that at least temporarily, this is going to be a bottom for now, right? You could see here with each new low, velocity getting stronger and stronger to the downside, telling us more lows are coming. But here we finally started to show divergence, and the stronger the buyers are, the stronger the divergence will be. So now the most likely scenario to me is that we come up, again, forget about CPI tomorrow, because I don't know how the market will react to the print. But what makes the most sense to me is that price will come up back up here to the hourly trigger at 24.54. Now, if price, which will drop about, let's say, 7 cents an hour. Now, if price gets whacked here, we might have to come down and make a second bullish hourly divergence, which would mean price needs to make one more marginal low. The hourly velocity divergence will look much better, and then price will snap back and make a sharp reversal. But if we don't get whacked at the hourly trigger, we can move up to the daily trigger, and again, the next test of these two triggers, the next time we come up to test this level, 29.86 and 30.17, once we break above, we're likely to see an extremely powerful advance to the upside. These triggers are very, very powerful, and this is where they cannot contain the price anymore, above these triggers. When they're clustered together like this and price breaks above, you guys saw on Monday when price broke above 30 and was at 35 in 5 minutes, right? It got halted and brought back down, but the only reason why they were able to do that is because Anemoi told us they were going to be able to do it, because there was nasty negative monthly velo, and so we knew we weren't going to be able to close above the monthly trigger. But you guys were able to see firsthand the power of the monthly and of price breaking through the monthly and the weekly trigger, even though we had to get brought back down because of the negative weekly velocity. So price was going to reject the weekly trigger, and because of the negative monthly velocity. The thing is, going into next week, going into the rest of this month, the monthly velocity is way more friendly to the idea of price moving above. Negative 1.1 isn't telling us that price is going to get slammed like it did here. It's telling us maybe we'll have to pin for a bit at the trigger before breaking above. Like maybe we'll hit 29.86, pull back to 29, hit it again, pull back to 29.30, and then break above. But it's not telling us we're going to get whacked anymore. So during the whole month of November, we have a really excellent window at breaking above these triggers, and this is our bogey. I know the Yahoo Finance article or whatever said 30, above 30 is parabolic. This has nothing to do with that. The triggers are calculated based on the point of U-mini motion, where once price breaks above, it's not really controllable anymore, because so much FOMO, volume, U-mini motion comes into play, and velocity goes to extremes to the upside. Look at the break below the weekly trigger here. Look how fast we came down to the monthly trigger, right? And then look at the break below the monthly trigger. Look how fast we came down. These breaks are strong. If you haven't seen any examples of price breaking through both these triggers at once, we'll just take a look at CAT. This is the only one I could think of off the top of my head, but it's a pretty good one. This is exactly what we can expect. So, CAT made a very, very similar thing. Came down, hit a bottom. So, for example, GME 22 would be right here. Makes the recovery. It gets sticky around the hourly trigger because nasty hourly velocity to the downside, right? And you could see very similar setup. You had the low, and then you had another marginal low, right? Let's say this is 22.40 and then 22 bucks. The hourly velocity diverged a little better here, but we still had hourly divergence, and then it gets sticky around here at the hourly trigger because coming off a nasty downside velocity like this is telling you that price isn't going to just be able to run away to the upside. It needs to do some time, pinning around the hourly trigger first. But then look what happens. You get back above the hourly trigger and you run straight to the daily trigger. You remain above the daily trigger, and once you break through the monthly trigger and the weekly trigger at once, price was 189 here. Within 10 days, it was $40 higher. $40, right? So again, these are very powerful triggers, and they work. You could see like the two perfect rejections here, because the weekly velocity was strongly negative here. The weekly velocity was negative here as well, and the weekly velocity was negative here as well. And you could see when price broke through the trigger right here, it was all the way at the end of the week when the negative velocity is at the weakest, because the negative weekly velocity, or the weekly velocity, is calculated Friday after close. So it's calculated like right here. On this Friday, it was calculated for this whole week, but the closer price gets to the trigger, the less negative velocity will be. So I'm looking for something very similar to CAT. This is what I think is about to unfold. I think we're going to come out of the hole. We're gonna thrash around by the hourly trigger for a bit. We're eventually going to break above, move over to the daily trigger, maybe a little bit more of thrashing, and then pop above. That's the upside. All right, that's the bullish scenario. The downside scenario is still long-term bullish, but a little bit more of pain. So the downside scenario is that we come up to the hourly trigger and we get rejected, or CPI data comes out and then it's interpreted bearishly. What that would mean is that we would have to come in and put in another low. Yeah, it's annoying because I spend most of my buying power over the past week. I don't have that much left to buy more shares, but I'm okay with it. We would have to make a new low. We would have to have another bullish hourly divergence, and then we would try again to snap back to the hourly trigger. But the main point is that even if we make a new low and then a second new low, it's automatically a buy because velocity will not exceed here. And once you have 3 bullish divergences, that sets up a macro reversal. I was actually able to call this entire move because I saw bullish divergences down here. Let's show you guys what this looks like. So check this out. Here is your most extreme print, negative 0.8, negative 0.85, right? And then right here, let's remove some of the other stuff. These calls went, like over 500%-ish. Here was your most extreme print, negative 8.5, price was 24.57. Here was your first bullish divergence, and here's your second bullish divergence, and here's your third bullish divergence, and then price made this massive reversal. So, and you could see price is coming down, 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 but velocity is going up, 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 telling us that during this battle, buyers are winning, and they're going to be able to push up the price up 50%. Actually, this was a 50% move to the upside. It's telling you buyers are willing and they will push up price, but no one else sees it besides Anemoi. So everyone's looking at this thrashing. They don't really know what's going on, but we see from the bullish divergences that buyers are winning the sellers, and we know that as soon as we get 3, that's going to cause this sharp reversal. So it's basically a win-win here. The end of the low volatility, low volume environments is when price breaks above the weekly trigger and the monthly trigger at the same time. The closer they are clustered together, the greater the opportunity. So that's all. Meaning if price would break through right here, 30 and then 33, it wouldn't be as spectacular as if price breaks through both at once. Next week, they're going to be the closest they ever were for GME. And if price breaks through this week or next week, it's going to be fireworks. And I'm going to be taking a large weekly bet or 2-week calls if that happens. Anybody have any questions? By the way, if you do want to use Anemoi, then you could sign up for free. You could view all of these charts on your own. If you want to see the day trader chart on the free version, you just go here and you type and you press 3 hour chart. If you want to join the Discord to take plays from Anemoi or learn Anemoi, then just shoot me a message on Twitter. Otherwise, I'm gonna stay on here for another like 3-4 minutes, take any questions you guys might have, and then I'll call it a day. So ask away. DJ Sutton says, "Can you take a look at bbby on the macro scale?" Of course, man. Is SPY bullish or bearish? I'll answer that after tomorrow. There's no point in me saying anything. Okay. You know, while I have you guys here, I want to show you guys 2 more nice examples of bullish daily divergence. Okay, you can't really see it anymore, but check this out. You see how the daily velocity here was negative 239? And price was at 924. This is going to be, now that you guys just saw that, you're going to like this. This is a daily velocity reversal right here. 3 bullish daily divergences. Okay, so negative 239, price is 924. Price makes a new low here, and what's the daily velo? Negative 236. So here's your most extreme print, negative 239. So everyone can agree that when price sells to this new low, this is but 1 bullish divergence, right? Over here, this is 2 bullish divergences. And over here, this is your 3rd bullish divergence. Look what happens after price makes 3 bullish divergences. Price comes straight up to attack the daily trigger. Now, it gets rejected here because the weekly velocity was nasty, and the monthly velocity was nasty. So again, when the higher time frame velocities are strongly negative, then we have to expect the lower time frame triggers to reject. When the higher time frame velocities are strongly positive, we have to expect the lower time frame triggers to act as support. Now, when we break above the daily trigger, we fly straight to the weekly trigger because the daily trigger is a really strong acceleration level. See how this works? Price literally breaks above the daily trigger, goes straight to the weekly trigger. Then watch this. Price rejects off the weekly trigger because the weekly velocity is still negative. When does it cross the weekly trigger? On a Friday, all the way at the end of the week, when the negative weekly velo is basically over, because the negative weekly velo is calculated right here. And so throughout the week, you don't see it changing, but it's really different by the day. You just get the print for the week. Towards the end of the week, the closer price is to the weekly trigger, the less negative the weekly velo is, and the further away, the more negative it is. So since price was hanging out around here Thursday, Friday, the negative weekly velo was basically not negative anymore. And on Friday, price broke above, and then we got this move. And look what happened when price broke above the monthly trigger, right? Extreme spike to the downside. Now the problem here, the reason why bbby came right back down, and on August 17th, I sent out a message to everybody that I think bbby is about to go right back down to $10, and then literally 6 days later, price went back to $10. On August 1st, when price broke above the daily trigger, I said I think bbby is about to run to $11, and then 4 days later, bbby was at $11. So, you know, Anemoi is really good for making money quickly with calls or puts. But you could see how the 3 bullish daily divergences led to an extremely strong reversal. My point from this is that everybody else watching this action has no clue who's winning, buyers or sellers. But us using Anemoi, we know that because this low came with bullish divergence, negative daily velocity did not make a new low, and this low came with bullish divergence, and this low came with bullish divergence, we know that buyers already won, right? And we know that a major reversal is going to happen. It took a little bit of time, took maybe a month or so, but the major reversal did happen. Now, let's go back here. We had the same exact thing. Here is your most extreme print. Price was 704. Here's your first bullish divergence, your second bullish divergence, and your third bullish divergence. Right here, I made a video, and on October 24th, I said that I'm going to buy calls the morning of October 25th. price opened at 9:30 and I bought calls, $6 calls for 2 months out, and BBBY went up 29% this day, and I sold them for 266%. Now the reason why I did that is because I knew I had my most extreme print here. I knew I had my first bullish divergence here, and I knew I had my second bullish divergence here. So in my mind, I said, as soon as I'm going to get a third low, I'm going to go calls 1 month out. I was waiting for a third low. So as soon as I got this low right here, I launched calls, and a day later we had the reversal straight to the daily trigger. Now we rejected the daily trigger again because weekly velocity is strongly negative, monthly velocity is strongly negative. When the higher time frame velocities are strongly negative, you have to expect the lower time frame triggers to provide resistance. Where we are now is we have to reset the count. Because price already made the snap back to the daily trigger, we have to reset the count. So taking a look at the daily velocity, here's going to be your most extreme print. All right, so price is 390. Here's going to be your first bullish divergence. Here's going to be your second bullish divergence. And I'm glad you brought this up, DJ Sutton, because next low that BBBY makes, I'm going to take a big call position because I know that it's telling me that price wants to go back to the daily trigger. Now, if you're watching this using technical analysis or your Robinhood app or whatever, and you see price getting crushed like this, you're probably thinking, hey, this is really bearish. I'm definitely going to stay away from calls. What I'm thinking is, here's your most extreme print. Price was 390. Here's your first bullish divergence. Here's your second bullish divergence. I want calls as soon as this thing makes a new low. Now, just to check, just to be sure, we want to make sure that we have confluence in the lower time frame velocities. So when we take a look at the hourly velocity, when we take a look at the hourly trigger, okay, so here, check this out, by the way. I'm glad you brought this up because great example, and now everybody could see that it works for every stock. Here's your most extreme print, right, on the hourly velocity. Here, you know what? I'll zoom out a bit. We always start from when price breaks below the hourly trigger. So here's where price breaks below the hourly trigger, and here's your most extreme print. The price is 453, and the hourly velocity is negative 0.37. Negative 0.36, here's your first bullish divergence, here's your second bullish divergence, and here's your third bullish divergence. Right after we make 3 new lows, but velocity does not make a new low, price goes straight to the hourly trigger. It works on every time frame. I showed you guys the 1 minute, the 5 minute, the hourly, the daily. I could show you guys examples on the weekly and monthly as well. Once again, here's your low, 453. Velocity is negative 0.37, okay? Now we make a new low right here. All right, you could count it a couple ways, but you make a new low right here, 430, and velocity does not make a new low. You make your second low right here, velocity does not make a new low. We'll call this one leg down, and on this third low, velocity did not make a new low. 3 bullish divergences, price goes straight back to the hourly trigger. Now we have to reset the count from here. So here's your most extreme print. Price was 359, and then I don't think we have a single bullish divergence on the hourly yet, but if price opens lower, we'll have bullish divergence on the hourly. And once we get, 3 bullish divergences on the hourly, then we could start, really considering the fact that BBBY has 3 daily divergences, 3 hourly divergences, and you can make a pretty incredible move to the upside. If we take a look at weekly velocity, still looks like it's going to need some work unless negative 345. Okay, so here's your first bullish weekly divergence on BBBY, which is a huge deal. So let me tell you guys about, negative 341, yeah. So this is your first weekly bullish divergence. And let me tell you guys something about weekly divergences. When you have weekly divergences, you will see the craziest move in stocks that you've ever seen. All right, so you see melt ups. So let me show you guys MMAT. And it works in every single stock. It's going to work every single time. Here's your most extreme print. Price was 105. Weekly velocity was negative 0.65. Here's your, for divergences on the macro, which is weekly velocity, we look for new lows on the macro. So this whole thing is one new low. Okay, one new low, bullish divergence. Notice how the weekly velocity doesn't make a new low. Here's your second new low, bullish divergence, and here's your third new low, bullish divergence. What do you think happens when price makes 3 bullish divergences on the weekly level? Well, price goes straight to the weekly trigger. See that? No other program in the world will tell you when the price was 66 that within a week price is going to double in price 100% on your return. But somebody in our group was watching this, and so he saw this most extreme print, and he saw this first new low without weekly velocity making a new print. He saw the second one, and when he saw the third one, he reached out to me and he said, hey man, MMAT is at 66 right now, 0.66, and it has 3 bullish divergences. The calls from when he alerted it went up 733%. So weekly velocity divergences are huge. If you want to take a look at Mullen as well, all right. Mullen, here's your most extreme print. Price was 122, and then you have first bullish divergence. You have your second bullish divergence. This is one leg down, but where it bottoms, you have your third bullish divergence. Price went from 22 to 57 in, literally a couple of days. Now, price still wants to attack the weekly trigger. It'll likely get there, but it didn't make it all the way there, but still had an incredible turn off the bottom on your third weekly divergence. We could actually see that we had daily divergence as well. So here's where price broke below the daily trigger. On this low, velocity printed here, negative, let's say 1.8, and on this low, this is not divergence, because from 102 to 77, velocity made a new low. So when you don't have divergence, it's telling you that price wants to sell further. But here you have your first, negative 0.77. Okay, so here's your first bullish divergence, second bullish divergence, and when we come down here, that's your third bullish daily divergence. And in literally the second after you had your third bullish divergence, price went to the daily trigger in 1 day. So let's show this count again. All right. So from here to here, velocity got more extreme. So Anemoi was telling us that we have more downs. All right. The price still wants to sell. Price here was 0.77. So this isn't a new low here. All right. When we count a low, we count it as a low and then a retracement. So this leg is just one continuous leg. As soon as price makes this retracement, we have to call this a low. So here's your most extreme print. Here's your first bullish divergence, down, 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 and then a retracement. So this is your second low. Over here, down, 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 down. Since we already know that we have 2 bullish divergences on the daily, while price is making this new low, we're furiously buying. My tweet about Mullen, price was at 24. And I said, I'm going to buy leaps every single week until Mullen explodes. Because going into the setup, I knew it was going to be my third bullish divergence. And literally 6 days later, price doubled in price in 1 day, 100% in 1 day. From 0.21, and it went above 0.40 at one point. My leaps went 600% on the 7th day that I bought them. I don't remember why we were talking about this, but I'll take some other questions now. Hey, I sent you those charts of DXY today on Twitter. Are you able to look at indexes on APT? Also, can you give me another hot take on BB? All right, so currencies are coming soon. We will have DXY fairly shortly. BB, actually, let's see. Oh, Lisa said my question above. You keep writing my question above. I don't see an actual, I'm sorry. What historical data is being used to calculate the triggers, may I ask? Is it a moving average or something specific? So, if everybody knew that, then Anemoi would be pretty useless. So that's kind of secret. I hope you're not offended by that. Okay, BBBY. Okay, so I'll tell you this much. Hourly trigger, daily trigger crosses are strong. Oh, and here's some more airplane examples for in case you guys missed it before. See how the hourly trigger comes down to the daily trigger and lifts off, and price moves up $1. And here the hourly trigger comes down to the daily trigger and lifts off, and price makes an explosive move to the upside. So again, airplane setups are very strong. Just a quick tutorial, just like there are airplanes, the hourly trigger coming down to the daily trigger and lifting off, there are also beer planes, which is the hourly trigger coming up to the daily trigger and turning away. And those are very bearish. See? The hourly trigger coming down to the daily trigger and lifting off is bullish. The hourly trigger coming up to the daily trigger and turning down is a beer plane. It's bearish, and price got whacked, as you can see. But trigger crosses are also very important. So here the hourly trigger crossed down below the daily trigger and price got whacked. Here the hourly trigger crossed above the daily trigger and price made a nice move up. So for BBBY, you're going to want to watch this close. If the hourly trigger crosses the daily trigger, then the most likely scenario is a push straight to 563. This move can happen very quickly. So I would, if you trade BB, I would create a free Anemoi account and just keep a close eye on this. If you see the hourly trigger currently at 464 above the daily trigger at 465, then you can have a really explosive push to the weekly trigger. I don't have a GME long-term target, but I will tell you this. We will sell the top of the squeeze. However high it will be, I will be tracking it on Anemoi. And let me tell you something about high velocity environments, right? A squeeze is a high velocity environment. There is nobody better in a high velocity environment than Anemoi. Nobody. Because while price is still pushing up, everybody else will be thinking that it's going to still go up, but I'll already be seeing hidden bearish divergences on the 1 minute, on the 5 minute, on the hourly, all giving me warning signals that the sellers are already winning and it's time to exit my position. So I am very confident that I'll be able to exit my share position, all my calls and everything near the top, because I'll be watching for clues in the velocity if as the squeeze ends. Also, just as a general statement, after the squeeze, during the squeeze, once price breaks back below the hourly trigger, it's going to come crashing down. So you're definitely going to want to have some sort of access to either the Discord or Anemoi when the squeeze does go down. Okay, I'm just about done here. Someone asked what my Twitter handle is. It's JRoll_. JRoll17 underscore. JROL 17 and then underscore. All right, if you guys have any questions, reach out on Twitter. My DMs are always open. I actually answer them pretty quickly. Otherwise, hope you all learned something. Have a great day, everybody.